Let's take you live now to Abuja, where the CBN governor is briefing after its Monetary Policy Committee meeting.
And Brazil, however, continued to battle high levels of infections and fatalities resulting from mutating strains of the virus. In the domestic environment, the economy is expected to remain on current trajectory of recovery in 2021, mirroring the cautious optimistic trend in global output recovery. The committee reviewed the developments in the global and domestic economic and financial environments in the second quarter of 2021 and the outlook for the rest of the year. 10 members of the MPC were present at this meeting. The global economic development. The committee noted that while the vaccination against COVID-19 is drastically reducing fatalities across several economies, the recovery remains uneven and is tilted against developing economies compared with developed economies with better access to vaccines. Other emerging market economies with strong manufacturing capabilities, like China, are also on the verge of full recovery. Accordingly, the International Monetary Fund, the IMF, revised global output growth for 2021 to 6%. This represents an upward revision of 0.5 percentage points compared with the earlier projection of 5.5%. The projection is, however, dependent on the efficient deployment of COVID-19 vaccines and sustained policy support across economies to strengthen the recovery of global output growth. Prices, however, are expected to rise globally due to the massive monetary and fiscal injections in several countries to mitigate the impact of the pandemic in several countries. The MPC noted the gradual recovery of prices, especially among some developed advanced economies, as inflation continued a steady movement towards the long-run objective of their central banks. It is expected that inflation may breach the long-term objective of several central banks in the medium term as economic activities continue to recover as more people are vaccinated. In several emerging market and developing economies, however, inflation has remained relatively high, with some economies confronted with significantly higher inflationary pressures than others because of legacy structural issues, capital flow reversals, and unabating exchange rate pressures. The prevailing conditions in the global financial markets remained relatively stable as central banks sustain monetary accommodation. There are, however, growing indications that monetary policy normalization may commence amongst some key central banks by the fourth quarter of 2021. The timing and pace of this normalization must, however, be carefully managed to mitigate the risk of a financial crisis post-pandemic. Domestic development. Available output data from the National Bureau of Statistics, the NBS, showed that real gross domestic product, the GDP, grew by 0.51% during the first quarter of 2021 compared with 0.11 and minus 3.62% during the fourth quarter and third quarter of 2020 respectively. Real GDP was driven largely by the non-oil sector, which grew by 0.79% during the first quarter of 2021 compared with 1.69 and minus 2.51% during the fourth quarter of 2020 and third quarter 2020 respectively. The major drivers of the non-oil GDP were agriculture and industry, with sectoral growth rates of 2.28 and 3.05% respectively during the first quarter of 2021. Whereas agric declined by 1.14 percentage points from 3.42% during the fourth quarter of 2020. Industry, supported by growth in manufacturing and construction, grew by 3.3 percentage points from minus 0.25% during the fourth quarter of 2020. The sectoral contribution of services to GDP, however, contracted from 1.31% during the fourth quarter of 2020 to minus 0.39% during the first quarter of 2021. The oil sector contracted further by minus 2.21% during the first quarter of 2021 from minus 19.76 and minus 13.89% recorded during the fourth quarter of 2020 and third quarter of 2020 respectively. The weak performance in the oil sector is largely attributable to the decline in production in compliance with the OPEC Plus production cut agreement. The committee noted the marginal growth in the Manufacturing Purchasing Managers Index to 49.0 index points in April 2021 from 48.8 index points in March 2021. This increase is a lead indicator of recovery of output growth following the easing of restrictions to curtail the spread of the pandemic. The non-manufacturing PMI, however, declined marginally to 47.33 index points in April 2021 compared with 47.9 index points in March 2021. The employment level component of the manufacturing and non-manufacturing PMIs rose moderately in April 2021 to 46.5 and 48.2 index points from 45.9 and 47.7 index points in March respectively. Committee noted the moderate decline in headline inflation year on year to 18.12% in April 2021 from 18.17% in March 2021, following 19 consecutive months of continuous rise. The decrease was driven by a marginal slowdown in food inflation to 22.72% in April 2021 from 22.95% in the previous month. This was partly attributed to the bank's massive interventions in various sectors of the economy to stimulate aggregate demand and boost production, particularly for small and medium enterprises. The MPC, however, noted that headline inflation remained well above the ceiling of the bank's 6 to 9% inflation target corridor as a result of a combination of factors, including the heightened security tensions in the country and deteriorating public infrastructure. As a result, the bank expressed its support to the federal government's commitment to tackle insecurity, as this will improve the business environment and encourage economic activities to rein in inflation. MPC was also mindful of the impact of exchange rate pressures resulting from capital flow reversals associated with COVID-19 shock as investors sought for safe havens. It, however, applauded extant measures by the bank in ensuring both liquidity and stability in the foreign exchange market, as well as moderating the exchange rate pass-through to inflation. On the performance of the monetary aggregate, committee noted that broad money supply M3 grew by 1.15% in April 2021 compared with 0.04% in March 2021. This development was largely driven by growth in the net domestic assets NDA, while net foreign assets NFA contracted. The growth in net domestic assets reflects the growth in aggregate credit supported by the ongoing broad-based monetary and fiscal stimulus. Accordingly, gross banking sector credit at the end of March 2021 stood at 23.53 trillion compared to 22.86 trillion at the end of December 2020. This represents an increase of 0.85 trillion year to date, of which commercial and merchant banks disbursed 0.66 trillion, microfinance 0.13 trillion, development finance intervention 0.05 trillion, and primarily mortgage banks and finance companies 0.01 trillion naira. The liquidity condition in the banking system in the review period was determined by several factors, including fiscal disbursements and withdrawals, by states and local governments, periodic CRR debit, foreign exchange interventions, open market operations, and maturing CBN bills, the net effect of which imposed liquidity constraints on the banking system. Accordingly, the monthly weighted average interbank call and open buyback rate (OBB) rates rose to 15.26% and 14.58% in April 2021, from 1.8 and 1.5 in March 2021, respectively. The committee noted the moderate decline in the equities market year to date, as the all-share index decreased by 1.97% to 38,287.58 on May 24, 2021, from 49,045.13 on March 30, 2021. Similarly, market capitalization decreased by 4.3% to 19.96 trillion on May 24, 2021, from 20.82 trillion in February 26, 2021. The MPC noted that the capital adequacy ratio and the liquidity ratios both remain above their prudential limits at 15.8 and 38.9%, respectively. The non-performing loans ratio (NPLs) at 5.89% in April 2021 showed progressive improvement compared with 6.6% in April 2020. The MPC, however, urged the bank to sustain its tight prudential regime to further reduce the level of non-performing loans in the industry. The committee noted the external reserves declined marginally to 34.17 billion as at May 21, 2021, from $34.29 billion as at the end of April 2021. This reflects sales to the foreign exchange market and third-party payments. Our outlook. The optimism for medium-term macroeconomic recovery in both the global and domestic economies is slow but steadily growing, even as some level of uncertainties are still present. This is due to the unabating COVID-19 pandemic in some countries, such as India and Brazil, caused by mutation of the virus into more fatal strains. In addition, the recovery is uneven and seems to be more likely to countries that have high vaccination rate than those less vaccinated or that are still suffering from the effects of the more fatal strains of COVID-19 disease. As conditions improve, however, central banks of the advanced economies are beginning to signal the possible shift in monetary conditions when normalization of monetary policy commences by the fourth quarter of 2021. Available data and forecasts for key macroeconomic variables for the Nigerian economy suggest that output growth will continue to recover for the rest of 2021. This is premised on the continued support for agriculture to improve food supply, rein in inflation, and improve employment. Others include efforts of both the monetary and fiscal authorities to improve infrastructure in the country. The forecast for the Nigerian economy for 2021 is thus strong domestic push to support recovery, particularly to ensure an end to insecurity in the country. Consequently, as the productive capacity of the economy improves and the supply chain fully restored, we expect inflationary pressure to begin to ease as the supply of goods and services offset demand. The committee's consideration. At this meeting, the MPC recognized that the twin problems confronting the Nigerian economy and that must be addressed relate to stagflation caused by rising inflation with output, in this case GDP, contracting at the same time. Committee further recognized that the strategy put in place to rein in inflation through the use of series of administrative measures by the bank to control money supply through liquidity mop-up in the banking system had started to yield results. It also recognized that measures put in place to stimulate output growth through the use of its intervention facilities to inject liquidity into employment generating and output stimulating initiatives like the Anchor Borrowers Program, Targeted Credit Facility, and ACME's Agric Small and Medium Enterprise Equity Investment Scheme had started to yield results. In the view of the MPC, although the economy had successfully exited the recession, the recovery was very, very fragile, given that the GDP of 0.151% was still far below population growth rate. Committee therefore was of the view that there is a strong need for the monetary authorities to consolidate on all administrative measures currently being taken, not only to rein in inflation, but also on the action so far taken to spur output growth. According to the committee, such measures include boosting consumption and investments, as well as diversifying the base of the Nigerian economy through effects of forex restrictions for the importation of goods and food products that can be produced in Nigeria. It also urged the bank to continue to put in place measures that will boost export earnings in Nigeria. On the consumption and investment side, MPC noted that although the intervention facilities to Anchor Borrowers Program currently at 631.4 billion to 3.1 million smallholder farmers cultivating 3.8 million hectares of land, for the ACMEs about 111.7 billion to 29,026 beneficiaries, for households under the targeted credit facilities about 253.4 billion naira to 548,345 beneficiaries, comprised of 470,969 households and 77,376 SMEs, have helped in boosting output. Management should therefore aggressively continue increase its intervention in these sectors, including agricultural processing and manufacturing. Under the National Youth Investment Fund, 2.1 billion naira has been disbursed to 7,057 beneficiaries, of which 4,411 are individuals and 2,646 are SMEs. Under the Creative Industry Financing Initiative, the CBN has disbursed 3.19 billion naira and to disburse to 341 beneficiaries across movie production, movie distribution, music and the software development sectors. Under the 1 trillion naira rail sector intervention, 856.3 billion has been disbursed to 233 real sector projects, of which 77 are in light manufacturing, 36 in agro-based industry, 30 in services, and 11 in mining. Under the 100 billion naira Healthcare Support Intervention Fund, 97.4 billion naira has been disbursed to 91 healthcare projects, out of which 26 are pharmaceuticals, 65 hospital services. Also, the sum of 232.5 million naira has been disbursed to 5 beneficiaries under the CBN's healthcare grant for research on COVID-19 and Lassa fever. Under the National Mass Metering Program, the CBN has disbursed 35.9 billion naira to 9 discos for the acquisition of 656,752 electricity meters. And under the National Nigerian Electricity Stabilization Facility, 2 NEMS, 93.8 billion naira has also been disbursed to 11 distribution companies. The committee members applauded government's efforts in combating the headwinds imposed by the pandemic and urged that going forward, government should avoid an entire nationwide lockdown like was experienced in 2020, as this will reverse the wholesome gains jointly achieved between the government and the central bank since the outbreak of this pandemic. The MPC carefully assessed the options on direction of policy in the short to medium term. It reappraised current measures by the government to purchase COVID-19 vaccines and the general preparedness of relevant public health agencies to guard against the spread of the mutating strains of the virus. To this end, the committee noted the appropriate steps taken by the government to ensure that up to 70% of the populace get vaccinated to drastically drive down the infection rate in the country and hence sustain economic activities. Committee noted the persisting security crisis, especially in major food producing regions of the country, and the severe toll on food supply and prices. It noted that inflation had moderated marginally due to the unrelenting efforts of the bank in supporting agriculture to boost food supply. The committee thus reiterated its call to the government to intensify various efforts towards addressing the security situation in the country to ease supply bottlenecks and bring down food prices. The MPC further noted government's commitment towards investing in public infrastructure despite constrained fiscal position and urged a continued focus on this objective while exploring the option of effective partnership with the private sector as improved road networks, telecommunications and power supply will greatly and positively impact the supply chain and moderate price developments in the country. It further noted the need for collaboration with Nigeria's huge diaspora through the issue of diaspora bonds targeted at specific infrastructure projects. Even as the committee noted that the public debt stock was currently high, it was of the view that project-specific diaspora bonds issues could conveniently pay itself back without imposing a burden on government finances. It noted the complementary role this would play in boosting foreign exchange supply, a creation to reserves, and easing of the current exchange rate pressure. Committee noted that the equities market remained in a comfortable place, an indication of investors' confidence in the stability of the Nigerian economy in the medium term. The MPC thus urged the bank to maintain its collaboration with the fiscal authority to improve investment climate towards attracting sustainable foreign direct investment. With the developments in the banking system, committee applauded the efforts of management in ensuring a reasonably low level and steadily reducing rate of non-performing loans, even as aggregate credit continued to expand through this crisis period. While non-performing loans remain marginally above the bank's regulatory threshold, members noted that it was at a reasonable level considering the current state of macroeconomic imbalances occasioned by the pandemic. Committee's decision. The recent developments in domestic economy presented two broad options to the NPC, which were to either aggressively address the high inflationary pressure or continue to pursue measures aimed at supporting this recovery. Whereas the committee remained overwhelmingly committed to supporting the efforts of the federal government in ensuring full restoration of the productive capacity of the Nigerian economy, members remained focused towards achieving price stability in the short to medium term. The MPC noted that economic growth could be hampered in an environment of unstable prices. To this end, The choice therefore was between loosening the stance of policy to ease credit further, or tighten to moderate price development, or maintain a hold stance in order to allow previous policy measures to continue to permeate the economy while observing global and domestic developments. Committee noted that an expansionary stance of policy could transmit to reduced pricing of the loan portfolios of deposit money banks and result therefore in cheaper credit to the real sector of the economy. On the converse, this expected transmission may be constrained by security challenges and infrastructural deficits. On the other hand, while a contractionary stance will only address the monetary component of price development, supply-side constraints such as the security crisis and infrastructural deficits can only be addressed by policies outside the purview of the central bank. A tight stance in the view of members of the MPC will also hamper the bank's objectives of providing low-cost credit to households, to micro, small and medium enterprises, to the agricultural and other output growth and employment stimulating sectors of the Nigerian economy. Based on the above considerations, the MPC made the decision to hold all policy parameters constant. Committee thus decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted as follows: 1. Retain MPR at 11.5%. 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the MPR. 3. Retain the CRR at 27.5. And 4. Retain liquidity ratio at 30%. Thank you most sincerely for your attention.
Thank you, Doctor. Central Bank of Nigeria. And that is the communique number 136 of the meeting of the Monetary Policy Committee of the Central Bank of Nigeria, delivered by the chairman of the MPC and the governor of the CBN, Mr. Godwin, CON. Now, we'll take some questions. We'll take some questions, and as usual, a number of the correspondents sending questions from their bases. As we due to COVID-19, we wouldn't be able to accommodate all of them. Now, for those ones here, you will tell us your name, the media house you represent, and your question, but please keep it simple. Thank you.
Thank you very much, sir. Good afternoon, Governor and all protocols observed. I am Nancy Naji, the Executive Producer of Moneyline in 2019. Governor, you alluded to the positive, though fragile movement we saw quarter-on-quarter GDP from 0.11% in Q4 to 0.51% in Q1. The surprise to many that had forecast the negative GDP in 2021.
You've been watching live broadcast from the nation's capital, Abuja, the CBN MPC outcomes as the MPC retains all parameters. Let's bring in Arise business analyst Bode Oshosami to make sense of it all. Bode, great to have you join us. You've been monitoring. We just got that decision of the Monetary Policy Committee retaining all parameters. Were there any surprises there?
Well, I wasn't surprised, and the markets were expecting that decision. But of course, what was more important in this meeting was to hear very attentively the views of the central bank in how it will be transitioning in terms of its focus from spurring the economic recovery and, of course, dealing with the problem of inflation, which, although we did see a slight improvement, but we all know that the prices are still high. Well, the other thing that was quite interesting, I tried to jot some points down on the main takeaway, is the consolidation strategy, which it was mentioned. The central bank did say that they would be consolidating on existing measures. That is, the increasing and making sure that the targeted intervention, be it in the agri sector, small and medium enterprise, and individuals, and also in areas like COVID research and development, will receive more attention. But the important thing here is that you want to watch and wait to see the impact. And while you're waiting to see the impact, you're also trying to debottleneck some of the areas that are not allowing the results to show. Although he did admit that some of the constraints, like infrastructure deficits and the security issues, are beyond what the central bank can deal with. He advised the government as well to avoid a national lockdown, which I think is also very important, so that the tempo of the recovery can continue to pick up. And then, of course, accelerating vaccines is extremely important, given the strong correlation that has been discovered between the pace of vaccine rollout and the recoveries that countries are seeing, especially in developed economies, noting, of course, that what we have now is an uneven situation. No surprises, really. The decision was made to hold. And he also mentioned some interesting ideas. Diaspora, for example, bonds issues can complement the public debt situation, especially to get important projects underway without further endangering the debt profile of the country. But I think the problem I saw here listening was that very little is changing, and the assumption, of course, is that if what we are doing is in the right direction, then we're going to get the right results ultimately. And some people may, of course, disagree that even though you are able to deal with the COVID pandemic and get some measure of growth, Nigeria's problems are largely pre-COVID, in many cases very structural, with huge reform deficits as well. Although he did mention that there is need to address some of these areas, he was quiet on issues such as the subsidy on petrol. I thought he would have a view there, particularly the impact that is going to have on inflation in the short term.
Okay, Bode, so overall, a cautious approach, keeping prices stable. And yet, there are certain factors that would doubtless put pressure on their decision-making. So to what extent do you think the slight moderation in inflation would influence their decision of the MPC?
Well, I heard the focus, listening to the governor. He did say that they were still going to look at price stabilization, because price stabilization is extremely important. And although there was that 18.12, which is slightly lower than what we had before, obviously that is not encouraging enough to make them relax. So the focus on still introducing measures to mop up excess liquidity, for example, will continue. And I think that's the way they try to deal with that. Of course, they cannot tighten at this point because of the impact that would have on the economy. But to another extent, I think he also tried to allay concerns in terms of where inflation is going. Many of us were a bit surprised when the inflation metric went down, because the expectation was that it would not go down until the May number. And of course, we saw it going down a month earlier, which shows, of course, that the measures to try and mop up excess liquidity and to ensure that the money supply situation is not out of control seem to be somewhat working. And if they continue in that direction, the central bank governor seems to be confident that we'll eventually begin to see inflation in a far more manageable level. But of course, he also noted, especially in the international context, that inflation is not a Nigerian problem. It's going to be a global problem as countries normalize and we begin to see this uptick in consumer prices, which is inevitable after such a downturn. The big question, of course, is how transitory are these inflation spikes? What will the experience be like in Nigeria? And I think it's still early stages. Definitely the next inflation metric is absolutely critical in terms of really understanding what is going on here.
All right, but this is the third meeting for the year for the MPC. How do you read the CBN's view on the inflation trajectory? And just to put you on notice, but as soon as we have the central bank governor responding to some of those questions on the floor, we'll have to interject.
Yes, well, indeed, the trajectory, based on his own assessment, was, of course, somewhat encouraging in the sense that it went down. And the reasons it went down is because they are also watching the money supply very, very, very carefully. And my thinking is the central bank was not self-congratulatory per se.
Unfortunately,
I think they were rather...
sorry to cut you short there. We have to return to the MPC, where the CBN governor is now briefing again.
Will begin to trend downwards. And at the same time that GDP is growing, though remains very fragile, but that some people still express surprise about it and then asking for our views by saying what are our views and what are we going to continue to do to ensure that these indices remain strong going forward. I think it's important to say this, that for us at the Central Bank of Nigeria, we are not surprised. We are not surprised because, if you recall, Nigeria is just one country that is peculiar for what is I call a situation that is out of the ordinary. Out of the ordinary because you find Nigeria amongst several countries being one country that is challenged by stagflation. Stagflation is a situation where inflation is running high, prices are running high, and at the same time, output growth, in this case the GDP, is contracting. And if you understand how this works, you will find that as Monetary Policy Committee, your core responsibility is to rein in inflation by ensuring that you keep supreme your price and monetary stability mandate. On the other hand, and to do so means that you have to tighten to be able to rein in inflation. On the other hand, government is confronted, or the economy is confronted by a contracting output where growth is negative. And the normal way in economics you would want to really recover from a contracting economy is to stimulate the economy with a lot of easing and injecting liquidity into the system to stimulate consumption and investments, increase government expenditure, right? Increase export earnings, and possibly see what you can do to reduce your imports. That is basically the definition of output growth. Y equals C plus I plus G plus X and minus I. That is what you need to do, right? So you find that in doing this, you are seeing a situation where the objectives or goals are moving in opposite direction. But what did we do? We said, at monetary policy, particularly at the last meeting, we said, we will try as much as possible to be pro-growth so as to continue to see what can be done to accelerate output, but at the same time, we are going to keep our eye on whatever can be done to rein in inflation. And in doing this, what did we say? Monetary policy came up at that meeting, last meeting, and said, the penultimate meeting, we said we are going to adopt a systematic synchronization of monetary policy variables, right, that will help to rein in inflation, but at the same time boost output. At the last meeting, we also said we will go ahead to look, monetary policy encourage the management to say that we should adopt some form of administrative measures to mop up liquidity or to control money supply in the system, and in the process, rein in inflation by reducing the money supply. That would help to control inflation, while at the same time, because what you will find is when you rein in inflation by mopping liquidity is that it becomes constraining. But at the same time, on the output side, what should we be doing? Let us use our development finance tools to to boost output by ensuring that liquidity and funding is made available at concessionary rates to employment generating and output stimulating sectors of the economy. So you are looking at how do you titrate these variables in a way that you are able to rein in inflation, but at the same time you also grow output. So that's what we have done. And that is the reason we're saying it's not a surprise to us, but those who do not understand it will say, oh, how is this happening? I'd heard a couple of people, some say, oh, they expected the output to be negative. I had heard some comments by somebody from LCCI, Lagos Chamber of Commerce, saying, oh, what is happening? That manufacturing has not seen enough impetus to begin to say that that the output growth should be positive. But let me give you some numbers. Like I read at the communique. When the pandemic struck effectively, we said all CBN intervention facilities will now go at 5%. And what we did is also expand that in 2021 into March 2022. We asked banks to restructure some of the facilities of companies and businesses that may not be able, that have been impacted adversely by the pandemic. We provided stimulus by saying that we're putting in place, at that time we initially started 100 billion for targeted first credit facility, increased it to 150 billion. At the last meeting it was increased to 300 billion because we saw the positive effect this was having on consumption expenditure, right? We also went forward to say that for the health sector, we'll make available stimulus of about 100 billion for some of our pharmaceutical industries that have gone moribund to come back alive, or even expand some of the plants of the existing ones. Or our hospitals, to see what can be done to retool our hospitals so they can provide health facilities. These are all stimulus that are meant to stimulate consumption expenditures and also investments. Don't forget the formula for GDP, consumption and investment. If we inject liquidity in that direction, normally what will happen on the result side is that output will grow. Okay, we understand government constraints, but at the same time we're doing everything as well to see what can we do to ensure that goods that can be produced in the country are produced so as to constrain imports and make it difficult for people who want to source forex to bring those things. So those are the things that will naturally result in this. So it is science. For us, it is science to expect that what happened or what is happening now is happening or has happened. On the manufacturing and agri sector, where Lagos Chamber of Commerce, Amuda was talking about, we made available 1 trillion naira. Out of the 1 trillion naira, we've disbursed so far 856 billion naira to 77 light manufacturing, 36 in agro-based industries, and 30 in services, and 11 in mining. These are targeted interventions to support, like we said, employment stimulating and output generating sectors of the economy at intervention rate of 5%, because these were funds that came in through the CBN DCRR facility. So it's not surprising that we're seeing what we're seeing now. So, but what monetary policy decided we should be doing today is to say, hey, how should we proceed? What are those indicators that led to us having this kind of results? And that is why monetary policy said, hey, let's look at those items, inflation, continue administrative measures. On the output side, continue to use your interventions as subsidized interest rates to those agriculture, to manufacturing, to the targeted credit facilities, to make sure that we're able to stimulate consumption and investment that will ultimately yield a positive result in growth for the economy. Indeed, out of the targeted credit facility that we have, almost the whole of 300 billion has now been disbursed, and we're expecting, the Monetary Policy Committee has encouraged the management to increase it even to 400. So what does that also mean? More money is going to be made available to households, to small businesses, for them to go back to business, which will ultimately yield employment and also grow our economy. So for us, it is not science. So when people begin to say they doubt what numbers NBS is releasing, I think they are speaking from a position of being uninformed about what is happening in the Nigerian economy. I've always often said it, that the CBN possesses the data, and we have data. As we have the data, we'll read the data to Nigerians for Nigerians to see what we're doing. So what we do expect is that people or policy analysts should ask or demand for data on the basis of which they come up with their conclusions, and not for them to making disparaging comments that tends to create problems for the managers of the economy. The second question had to do with security challenges and the economy. Naturally, there is interconnectivity between security and economy. For an economy to grow, or if you expect an economy to grow, the level of insecurity must be low. Because if there's high level of insecurity that results in the kind of situation we're seeing today, then the economy will suffer, even in the midst of all the efforts we're putting in place to resolve the problem. So, but I had heard last week after the National Security Council meeting, the Chief of Defense Staff had come up to say, and to assure us that everything is being done. He talked about the fact that the military has made some successful inroads into the north central part of the country. Indeed, I was reading newspaper yesterday where even the people from Niger State and the governor were saying they have seen some improvements in level of security in the state, which tends to confirm what the Chief of Defense Staff talked about. And he also talked about the fact that in the northwest part of the country, that efforts have been made as well to correct some of the security challenges in those areas. Yes, they have not fully completed that assignment, but at least we've seen that they are making some progress. He also alluded to the fact that efforts will now be targeted at the southeastern part of the country and the southwestern part of the country, or in the northeastern part. So I am optimistic that the security institutions are doing their best to tackle insecurity. And I must say this, Nigerians know that about 3 years ago, the federal government of Nigeria and the United States government signed a pact that resulted in a government-to-government acquisition of military equipment, out of which we're expecting at least 12 Tucano aircraft or fighter planes that will help us combat security. LCs were opened to the Central Bank of Nigeria and funds were remitted to the United States government. I'm aware that at least 6 of those Tucano aircrafts are going to be coming in the months of July and August. And I therefore would like to appeal to our brothers who decide that they want to live in the bushes and forests, that they should please begin to retreat, drop their arms, and come and embrace Uncle Bora's program. If they do so, it will help them. But if they choose not to do so, then they will be confronted by security as this battle continues. So I'm optimistic that before the end of the year, around the end of the year, the security challenges that confront the country will substantially abate. The third question talked about NTA, that in February the CBN announced a number of stimulus to SMEs, and that yes, we've announced 5% extension. We said, like I read earlier about the various interventions that we had put in place, and we said, for us, our 5% for CBN intervention facilities, we extended to next year. The banks are asking for their loans to be paid back. And in any case, the banks, I must admit, are seeing that there's some improvement in the economy, fragile as it may be. There's some improvement. Crude prices have gone up. So business activities are beginning to regain energy again and life. So if the banks ask for the repayment of their facilities, I think it will be justified. You raise the issue of interest rates, that the banks are charging higher rates. If we admit as CBN that we are controlling money supply. If we control money supply and the banks raise interest rates in what I can call non-employment generating sectors or non-output generating sectors of the economy, we can't fault them because we have our own intervention facilities, right, that are meant to target agriculture and all those SMEs and targeted households, which are meant to stimulate employment and also stimulate output for the country, and we can always make those facilities available at maximum 9% interest rate. So we know what we're doing. So, but if you are going into the kind of ventures that are finished goods, you want to think that what you want to do is to just import anything and everything out of the country into the country, then you pay the price. That is all I can say. The fourth question talked about issue of cryptocurrency and all that. No, I mean, it's not about CBN being vindicated and all that. See, we had carried out our own investigation and we found out that a substantial percentage of what our people are getting involved in cryptocurrency, that it is not the best. Don't get me wrong, some may be legitimate, but I'm standing and sitting before and say most are illegitimate. And I will corroborate that. Under cryptocurrency and Bitcoin, Nigeria comes second, right? But in the global size of the economy, Nigeria comes 27th. So do you think that there is some correlation? Why would you think those countries whose economies are between second and 26th, they will allow you to grow your cryptocurrency business to second position? Do you understand? If there was something, if what is inside it is a big deal that is going to profit everybody, it's not that simple. We are still conducting our data, we'll make our data available. But what I'm saying is, of course, we saw it that the market collapsed. Elon Musk, when it came about, said, he tweeted initially sometime about the time we said our banking and payment infrastructure will no longer be available for cryptocurrency transaction. He tweeted he was going to invest, is it 1.5 or $50 billion in crypto? $1.5 billion in crypto, and the rate went to the highest roof. And he now tweeted again and raised a few concerns, and the thing plunged. Elon Musk himself has decided that he will no longer deal in cryptos. So, if the man who felt it was good suddenly decides to say it's no longer good, and then you, that you think you are dealing in... So I was confronted at National Assembly by somebody who said, Central Bank Governor, I deal in $50 million in crypto per week. I said, $50 million per week? Where did the dollar come to? Through which bank did the dollar or $50 million per week flow through? And he was looking at me because those dollars did not come into the Nigerian economy. If it doesn't come to the Nigerian economy, I have no reason to believe that it's a legitimate business. Otherwise, if you feel it is money that is legit, $50 million per week, you sit in your house and use computer to do whatever you are doing, and you say you transfer $50 million per week, bring it, let the world see it, so that we can really support you in this transaction. But don't forget, those who invented crypto said it is encrypted. When they say it is encrypted, it means that whatever is happening between me and you is only known to the two of us. And you know what? In case I defraud you, because it's encrypted, you can't even disclose my name. You can't even get your money back. That is not what a responsible central bank will support. I've heard about digital currency. We are working on it. We have set up our committee in CBN, and I can assure everybody that digital currency will come to life even in Nigeria. Now, that recently the exchange rate on our website here, that we did a somersault. We didn't do a somersault. We know what we're doing. We found out that we were no longer dealing in this so-called CBN official rate. All transactions are benchmarked against the NFX. I had read in some places where some said, it's because we had depreciated the currency or stuff and all that. And I came out and said, we did not depreciate the currency. the market, Nigeria still operates a managed float regime, where CBN will observe the market. As it deems fit, depending on its direction or where it thinks the market will be, will intervene in the market to control exchange rate in the market. That's what we're doing. So if you now see again that CBN has written where it was CBN official rate at 380, it has now become NEFEX. That NEFEX that you see today of 410, tomorrow may be 409, the next day may be 411, the third day may be 412, and the next day comes to even 400, because we are monitoring the market. So it is not fixed, but it's not floating, so that you don't misunderstand that I said it's floating. We are still running a managed float where we are monitoring the market and seeing what is happening for us to ensure that the right things are happening for the good of the Nigerian economy. Somebody talked about availability of forex. Gentlemen, $34 billion or $35 billion can support almost close to about 9-10 months of Nigeria's imports and goods or services. I don't know why anybody would worry, and I can only just assure you that we're doing everything to ensure that the Central Bank of Nigeria is able to fund all legitimate domestic import obligations of people who need foreign exchange. And we are not going to shirk our responsibility in this area. Radio Nigeria said that I was quoted by the media as on this issue of state government, they're going to pay their loans. You know, there are two things, like I said, two aspects to this. There are intervention facilities granted by the bank, and there are bilateral facilities granted by the deposit money banks to them. They went to deposit money banks. They asked for loan. They signed the offer letters with those banks. They gave their ISPOs to the Federal Minister of Finance that on a monthly basis, Minister of Finance should deduct from their monies and pay the banks for the loan they have taken. And I am aware that the banks have written to finance and they have copied me that they want their money. If it was a bilateral loan agreement, in fact, there's privacy of contract here. I'm not part of it, so they should pay their loans. On the CBN intervention facility to the state governments, we're engaging National Economic Council, and CBN is also insisting on his loan to be paid. But depending on the outcome of engagement between Central Bank, Finance, and National Economic Council, we will begin to take the monies. But in any case, it's good for you to be a good debtor. When you take a loan, you pay, so that when you go back to the bank, you can get. But if you refuse to pay, you will never smell the doorstep of the banker again. Now, the Naira for Dollar scheme, yes, we extended it indefinitely. Why? Because we feel that we need to encourage diaspora remittance into Nigeria. Don't forget, I keep saying that I have been reading that the size of diaspora remittance in Nigeria is almost 24 billion, or some say 30 billion. But in the past, I've not seen it. But I'm trying to see how I can see it. And the only way I can see it is that I should encourage those who think they want to hide to bring it out. So that is like an incentive, like a promo. And we decided we're going to do the promo so it can continue, so we can continue to see the flows coming in. And we're hoping, and we have seen the trend that it is rising. Listen, we did this because we feel other countries are doing those kind of incentives. Pakistan, Bangladesh, on a monthly basis, they collect close to $2 billion from diaspora remittances, and they have similar kind of incentives that they put for their citizens in diaspora to inflow monies. And so nothing is wrong with that, and we will continue to do whatever needs to be done to encourage diaspora remittance, because it's one of the 4 areas through which we can encourage flows into the country for us to meet our obligations. Okay, I've responded on cryptocurrency. Ekiti State. Oh yeah, we were in Ekiti State, and I was responding to the accusation that our support is tilted to a particular section of the country, and I debunked it, because, like I said, close almost about 600 billion or so or more had been disbursed to various interventions of the Central Bank of Nigeria, and out of that, at least 300 billion, and we gave data that 300 billion has been disbursed to the southern part of the country. Yes, we've been to Niger, We've been to Kebbi, we've been to Gombe, we've been to Katsina to launch our pyramids and the 2021 planting season. We were at Ekiti last week. Sometime this week, I will also be even in Rivers State to launch one of our agricultural plants, which is one of the biggest starch processing plants in Nigeria. And what does that mean? That instead of multinationals like Nestle coming to central bank to say that they need foreign exchange to import starch or to import starch and maybe sorbitol and the rest of them, that this company in Port Harcourt or somewhere in Bayelsa in different parts of the country can also process cassava into starch, which the likes of Nestle can buy, and so that will help us to reduce the import drive for people to begin to say they want to import starch or sorbitol into the country. So it is for, I use the word, our own selfish purpose that we are doing that, because we want to see to how we can produce and consume what we produce in Nigeria rather than importing them, when we know that we can create employment and boost output with those. Daily Trust, I see Nigeria Bureau of Statistics, they released inflation numbers. I've responded to that. Talked about the CBN is adopting various measures that have helped to stimulate output, such as credit to SMEs, direct credit facility. How now that CBN is attaining the threshold, what does CBN intend to do? Yeah, as long as we find that what we are doing is yielding results, particularly boosting consumption, expenditure, and investment, we will continue to do so. And that is the reason monetary policy has given us the mandate to say, look, instead of plateauing at 300 billion, move further to 400 billion and support our households and SMEs for them to really begin to do business. Somebody wants a loan of 500,000 naira and he goes to the bank, can't get the loan. We'll make this available for them. And we have received positive testimonials about how this has helped and impacted positively on the life. In fact, we're going to begin to run a TV documentary to show those who have benefited from it and how it is helping them to create jobs for them and also create jobs for other people. So we'll continue to do any of these things because we believe that it will help our economy to grow and everybody will be happy and jobs will be created and the level of insecurity can reduce. I thank you most sincerely for your attention. We'll see you again in 8 weeks. Thank you.